Good morning, traders. Chris Bus here with Traders Profit Compass with another edition of Before the Bell, your home for actionable pre-market content. Today is Wednesday, June 22nd, 6:46 a.m. as I'm starting the video. And as always, please run your player at 1.5x. Kind of a wobbly start this morning. Taking a quick look at futures, Bitcoin down 2%, oil really getting whacked again, down 4.5%. Equities had been down about 2%, put in a little bit of a rally, now down about 1.4%. Nat gas down 1.6%, and copper's down a big 3%. Over on the macro front, all eyes on Jay Powell again, given a talk at 9:30, of course, right when the bell rings. So everybody will be focused in on that. I don't know if that's going to be carried live or just notes through financial media, what he's saying. Also, we've got a 20-year bond auction at 1 p.m. And after the bell today, KB Homes announces earnings. Lennar had a pretty good report yesterday. I think it was up a little bit, but home builders remain in focus. So, driving through the charts today, I don't think there's a ton of nuance or a whole bunch to, add. This bounce either materializes or they fade it and we start selling again. I mean, it's pretty much that simple. We'll go through the charts here, but, we remain pretty much oversold across the board. I mean, yesterday did a little bit, but I was disappointed after the initial pop. A lot of stocks either faded or oscillated at its morning highs the rest of the day. So there really wasn't a lot of follow through. I told you some of the things that I got long yesterday. I still have those. So it'll remain to be seen if the market can gather itself this morning. Maybe off of Powell's statements, who knows? But for whatever reason, of course, we want to see some follow through, at least for a relief rally, if nothing else. So moving on to our put to call ratio, you can see yesterday that there was a lot of call buying. Ratio at its highs really since the March and April timeframe, up here at 1.17, and you can see that it eclipsed all of these peaks back in April and May. So if you got long anything yesterday, you certainly had a lot of company. Bitcoin's down a little bit. I think really the price is in no man's land here. I think you've either got to wait for a move back down into 19,000 or even a retag of the lows before you can do anything, or a recapture of 24,000. Now I know that's a wide range. You could certainly drill down into a 60-minute or a 30-minute chart to see if you can find some intermediate levels there to shoot against. But on the daily time frame, you can see that we're kind of stuck here in the middle. Our oscillators jumped up, as you'd expect, towards the bottom third of the range, minus 17 on the NYSE. NASDAQ popped into positive territory at 10. The percentage above 50 really hasn't changed materially. I mean, we're down here at 10% on the NASDAQ and at 14% on the NYSE, percent over 50. So still really, really low. If we move on to SPY, what I've done is adjust the charts to show you the locations of the gaps resulting from yesterday's gap open. So you'll have those as a reference point. You can see the one here for SPY. So really the key levels, just generically speaking, are number one, can we recapture and exceed yesterday's high, or do we break down below the previous low? And you can see, in between here, yes, you've got a gap fill, and we can move on to the 60-minute chart just to get some magnification on it. We're going to open weekly, down towards the top of the gap, whether we rally pre-market or whatever, that doesn't really matter. What you want to see is a break above yesterday's highs, which would open up the door for a move up to these next level of gaps, or do we get a gap fill and potentially even come back to retag the lows down here at 362.50, excuse me. So we've got some well-defined levels given the highs of yesterday, the gap, and then the prior lows. And you know how this works by now. You're recapturing levels from below, or you're losing levels from above. And really, so now the way I view this, even though it may hurt any long positions you may have today, if we go down and fill this gap and reverse, or even go back to the prior low and reverse, then there's no real technical damage to speak of. We made a move higher yesterday. Maybe they fade that today and bring it all the way back. The thing you got to watch is a break of the prior low, and you can use that on any particular trade that you may have on, assuming, if you're long, that's a hard exit. If you're long SPY and we lose the prior low, that's a hard exit. If you're more nimble and you get the idea that, okay, we lost the top of the gap and we're going to go down, if you want to exit your longs and get short for a gap fill, or even potentially a run back down to the prior lows, then of course you're welcome to do that. Moving on to the Qs, exactly the same setup. The gap is not as pronounced here on the Qs as it is on SPY, just a sliver of a gap. Well, do I have that right? Says it's $4. Doesn't look like that. Let's look at the. Yeah, well, I guess it is. It is what it is. The scale was really compressed on another chart, but here again, the same idea applies. If you take out yesterday's high at around 282.50, then that opens the door up to 87. If we drop back and fill this gap and make a run at the low down at 270 and break that, then I think there's going to be what could potentially be quite a flush, because you never want to see that. And given the price action of the last week to 10 days, you break the prior low, I think everybody and their brother will, number one, be getting out of their longs, and number two, most likely going short. We're not the only ones with charts, so you've got to have that prior low of 270 on QQQ really highlighted and alarmed in your platform. So today I would have the gap in focus, the prior highs, and the prior lows. Same analysis. I mean, I wish I could offer you some brilliant nuggets of insight here, but most of the charts are exactly the same in the sense that somewhat of a bounce. You can see here on the IWM chart, printed like a doji candle, spinning top, whatever you want to call it, showing a lot of indecision. They really didn't fade it, but they didn't drive it higher as well. So you've got the gap there, and then you've got the prior low at 162.50. I forgot to mark the gap here on this 60-minute chart. You can see where it is, 165.18 to 166.81, and then you've got the prior low down here at, I think it actually got to 162.5. I've got it marked here at 163. You certainly don't want to see that level break here today. And you can see up above, we had made inroads into this gap, and this is the remaining unfilled portion. So a move above 170 would be your buy for that gap fill, and then your next level up above for a breakout is around 172.25. You can see that line across here where we had made a couple of tries above, but then were pushed back, responsive sellers here. But what makes this line important on IWM are these prior lows back in the chart. And so that means if price can break above, I think you get a fast move up to this 175 level at the bottom of the gap. I'm going to show you Meta here on the daily time frame. This is actually one chart that wasn't different. There was no bounce yesterday. They just more or less started selling it out of the gate, and we were down 4%. So I think we're open down to 150. And if we look here on the 60-minute chart, you can see that the opening was really weak and came back down to this trend line. I think if we head lower from here, I'd be looking at 152.75 as a first stop. So I was flipping through my Twitter feed, and somebody said, why does Facebook keep going down? And somebody replied, because it's in a downtrend. And I think that kind of sums it up. I think we as traders, in our intellectual curiosity, we're always looking for the reason why. Why were we down today? Why were we up today? Yeah, sometimes you can get a news event where on earnings, or the CEO makes a comment, or there's a downgrade. You have an obvious catalyst. But a lot of times you don't. It's just market conditions. So just to try to keep your mind uncluttered. When you've got a situation like this, don't trouble yourself too much in all the reasons why. We're in, more or less a bear market. Any bounce we get here is a bear market rally that will eventually be sold. And given the pre-market action, that rally may have only lasted a day, right? Where more sellers came in and, the oscillators and the sentiment be damned, they just want to sell more without a big particular reason why. So what's best to do, at least in my estimation, is, trade level to level. That's all you can do. And if you were playing for a bounce, and then you came back and lost this prior low, and certainly if you lost this low, you've got to get out of your position, and then you can decide if you want to quickly pivot to a short position or just step aside on your longs. Apple, same thing. We had a powerful first bar, got up to 137, and you can see how important that line is. Why? Rejection, support, 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 support. So that 137 is a big line. So now we've had quite a number of reactions along that 137 line. And that's really the line in the sand for price to take the next leg higher. You can see I've got the gap identified here for you. So if we open lower, you've got a little layer of support here at 134, but then you've got the top of the gap at 133.32, gap fill, and then the prior low down at 129 to reference. Really star of the show yesterday, as far as the mega cap tech goes, was Tesla, up 9%. Gap open. We had a gap in here that it filled, broke through the 60-minute downtrend line, made a run up to 120, actually got what was the high, 730, 731, and then it rolled over into the end of the day. But still, a really nice day. This was really the only stock on the, of the ones that we cover each and every morning that had two nice follow-through candles on the hourly chart. So now I've got the gap for you identified. I think this morning a real important line to hold on any weakness is this 700 with possibly a little bit of wiggle room to the downside because of this downtrend line. You could come down here to 700, maybe undercut it a little bit to say 695 and then get a bounce there. But you get much below 695, 690, you're probably going to come back here to 650 at the, 673 at the top of the gap. And then, of course, if that breaks, you probably get your gap fill. Microsoft, if you recall yesterday, we said 254 was your breakout level. Same reasons why. And I'll give you a little phrase that helps when you're charting, or developing your important lines on the chart, is look left for structure. Look left for structure. So we look left. What do we see? Resistance 254, support 254, support, a lot of support, and support. So, and then you can also use your large volume over price bars in the same manner. You can see up above, well, one, you've got the gap here at 261, but also you've got a high volume over price bar. You've got support here, a lot of resistance, some support, some resistance. So look left for structure, look at your volume over price bars, and they'll almost pre-identify the key levels for you to watch, either on the upside or the downside. And so really, for any kind of a extended move, you got to see 254 taken out to the upside. And so I've got a small position long. Obviously, depending on what happens this morning and the rest of the day, that'll either hurt a little, or if we come down and then rally back above, it may prove to be right. But that same characteristic that I was talking about, one initial bar, and then it literally did nothing the rest of the day. Held its ground, wasn't faded particularly, but didn't make any progress either. Amazon made a little run. We talked about that 111 line. Took a peek above, came back, they faded it. Weak close. Now you've got the gap here that starts at 107.89. That would be my first spot. And if you're not in it and you're looking for a long, of course, you can always buy the top of the gap or buy the bottom of the gap if it holds. But you've got a big line here at 102, 102.50 that you can see prior low, bunch of support right here. I mean, if you were going to take a shot long and you saw price come all the way back to 102, that's about as objective as it gets. The prior lows that hold. And you can see here that I've got daily support at 96. If for some reason 102 does not hold that prior low, that's going to be a big level. And if you see 102 fail, even if you were long, for an hour, and you see them fade that and break 102, that's your very objective short. If 102 cannot hold in Amazon, that's definitely a short you want to take. And I will also say this, since the 20-for-1 split, if you were ever, and that's part of why they did it, to bring in more retail, people that really can't afford, $2,000 for an option. Well, now they're affordable. So if you haven't been used to trading Amazon, that whole thing has opened up for you, me, everybody, that now you can get, an affordable option on that. So if you haven't become familiar with the Amazon charts, I would bring that back into focus for either now or down the road once you become familiar with the price action on Amazon. Google, actually, this had a nice day as well, up 4%. Put in two strong candles, came right up to our level right here at 22.45, where it was stonewalled. So I have the gap marked in here, and on the downside, we do have some support here at 2200, resistance, support, support. So that 2200 would be a good line to keep in focus on any pullback, and to see if that weakness holds into that area. So I think that's going to be an objective place to look for a hold and potentially a place to get long. Netflix did not do anything yesterday. Bad day considering it was green overall, and Netflix was down 2%. So there's no real gaps here to worry about like in the other cases. You've got a prior low down here at 163, 163 and a half. You've got a pivot point at 172, and then you've got resistance at 177.50. So the lines are pretty well defined in this particular case for Netflix. Semiconductors also, I didn't really like the price action. I had bought this recapture of, I actually think I got in about a little over 210. I had that on a 5-minute chart as a recapture level. So I got long semis, looked great for about a half an hour, and then they kind of, it petered out. So same exact analysis. If we can take out yesterday's high at 214.31, we will get into the remainder of this gap, and then we've got a gap above that also needs to be filled. And then on the downside, same thing. If you see 202.50 break, that's your short. Break of the previous lows down here, that would be a signal, certainly to get out of any long that you had, but also time to look for downside if they decide to liquidate the whole thing and break this lower. Wrapping up quickly with a couple of ARK names. ARK FinTech made a nice move into this big gap, but found trouble at 1650. Not a coincidence. Why? Prior low. So, if you're new to the channel, first, thanks for spending time with me. I identify all these key levels. And so, if you were in this, you would have already known that 1650 was going to be somewhat of an important level. And if you didn't have that there, if you didn't have that pre-identified, you'd say, oh, it's just going to fill the gap because gaps always get filled. Well, they will get filled, but it's a matter of when. And having that level there at 1650 would have given you a clue that there might be some pushback by the sellers at that level because of the prior low. Now, if we exceed that today, then yeah, we're going to get the gap fill if this makes a comeback. But now we've got a gap below 1575 that runs down to 1530, and then you've got the prior lows identified at 1480. If we move on to ARK, we made a run, kind of ran out of gas here and faded back. Here's your gap, and well off of the prior lows down here at 36.50. So on this one, depending on where we open, I think if you break this 38.80, that might be a nice short if things start deteriorating. You could get a move, more or less a $2 move from 38.80 down to the prior lows at 36.50. So that's in excess of $2. That might be a nice trade for you if this rally, if you can call it that, one day wonder, if they fade it, come back and fill the gap in at whatever time and lose this 38.80, then you've definitely got a short below that level back looking for the prior lows. So just to recap, we got J. Powell at 9:30. Whether he does a boilerplate or provides nuances to last week's Fed announcement, we don't know. As I mentioned yesterday, there's a whole ton of Fed speakers coming out, but I can't imagine them saying anything too much different than what the chairman's going to say at 9:30. And remember, he's coming back again tomorrow for another talk. So, but I think today will be the most important, because tomorrow he'll probably say what he said today, maybe use a little different language, but I doubt there's going to be anything new tomorrow versus what he says today. So I think his speech at 9:30 will be relatively important, and we'll have to see how the market reacts. Certainly would be a disappointment if this budding rally were to be faded, but the positive is we would still know that the selling pressure is really, really strong, and hopefully if we're sharp enough and are able to read the tea leaves, if this thing does break down, we can get some short side exposure and get an objective entry, because at least now we don't have what we had earlier, big, 3%, 4% gap downs where it's hard to really step in. So at least now we've got some decent levels to shoot against, both on the long side and the short side if things fall apart. We've got a lot of gaps below, of course, and we'll just see how it goes this morning. So let's wrap it up there. As I previously mentioned, if you're new, thank you so much for spending time with me this morning. I do my best to give you objective levels to shoot against, so you won't be guessing. And if you follow along, I think you'll find yourself making better and more objective trades than previously. So if that interests you, please subscribe to the channel, hit the alarm bell, hit the subscribe, hit the like button, leave me a comment, or put in a request for a specific stock or a sector. I'm happy to work those up and put them in a following, either a dedicated video or work it into an existing one. Happy to do that for you. And then jump over in the show notes, find the link to the blog site where you can drop in your email address, and then you'll get my content morning, noon, or night, right or wrong, good or bad. You will know what's going on, and you can decide then whether to follow along or put something on your radar screen, etc. So it'd be great to have you, and you'll also get an invite to our trading room. A lot of aspiring traders all pulling in the same direction. It's nice to have that camaraderie during the day. So let's leave it at that. Have a good day of trading. This has been Chris Buss with Traders Profit Compass. Talk to you next time.